What's up, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. This is our late night edition, team. It is Friday night. Hope everyone had a good trading day. Today we're going to talk about the price action in the headline indices. Today was another discombobulating trading day. That's really been the theme. September and October, we've essentially been in a trendless market, and we were trading at some key levels today. And we're going to talk about that. Before we jump in, a quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, let's dive in, team. All right, so S&P 500 box scores for today. So today we got some red across the screen, team. So S&P 500, as measured by the SPY, closed down 0.18%. Nasdaq QQQ finished down 0.5%. IWM small caps were our biggest loser for the day. It seems like they keep alternating. Biggest loser, biggest winner, down 0.75%. And then the Dow Jones was our biggest winner, down 0.03%. Volatility was down in every index, which is actually very odd. You would think, hey, if these indices were selling off, the volatility would be picking up in all of them, but we had the reverse. We did have a little pop and vol in the morning off of our jobs report. We'll talk about that as well. But then volatility really settled in, and then breadth was poor across all of these indices. So we had the Dow Jones with the best breadth at 41% advancers, and then we had the Qs with the worst breadth at 31% advancers. This is by no means a complete washout. Sometimes if you have a washout, there'll be like 10% advancers in each, but definitely poor breadth. So let's dive in, team. So we had our jobs report in the morning. I'm just going to pull up this heat map while we talk about it. So jobs report, everyone was expecting 500,000 new jobs created in September. The number actually came out much weaker. It came out at 194,000 jobs. So pretty light. I mean, there are some narratives like, this jobs report took place during the peak of this, Delta variant wave, whatever you want to call it. But I think the way this is being interpreted, and really just based on the price action that I'm seeing, is, everyone knows the Federal Reserve has to taper. And why do they have to taper? Because inflation is running to the upside. Really, what you don't want to see is the Fed having to taper into an economic slowdown. That's what we had in 2018, and we had a bad result for the market. So yeah, when we got that jobs print, we had the downward price action in the small caps, and that really, to me stuck out as like, hey, maybe people are saying like, oh, there could be economic weakness, etc. So yeah, looking at this heat map, you will see some of these FANG names were relatively buoyant. We had Microsoft unchanged, Google positive, Facebook positive, Apple and Amazon also pretty much unchanged. Really where we saw weakness, you can see these utilities were very weak. Real estate, we'll dive into some of these weaker areas of the market. Let's actually go to them right now since we're on that topic. So looking at our breakdown, Chinese technology names are back in our top sector momentum slot. So they are number 3 on our list, behind energy, which is at the number 1 slot of 3.08%, and the regional banks in our number 2 slot. So yeah, I added some exposure to K-Web today, looking good. And let's take a look at what else was positive. So we had energy, cyclical, regional banks, cyclical, Chinese stocks, previously beaten down area of the market, financials, cyclical, capital markets, cyclical, European financials. So basically it's financials and energy that are doing very well. And then we had transports positive, global autos positive as well. So we're definitely seeing this sort of like a cyclical reopening tilt in the market. And then let's see what did very poorly today. So let's check it out. Towards the bottom of our list, our biggest losers, the ARK Innovation Fund, was down 1.78%. Poor Kathy. Everyone hates Kathy. They all want to see her fail. I want to see Kathy succeed. But yeah, her fund, she had an amazing 2020, and then 2021, hasn't really been that good. There's nothing, crazy about that. That definitely happens, but yeah, her fund, got hit the hardest today. Let's actually take a look at this ARK fund. Let's take a look at and just like assess the damage. ARK. Yeah, so this got a bit of a bounce. It was trending sideways for a while, and really, it's just been in a sideways trend since March. So yeah, nothing really going on here, and we're just, we're moving towards the low end of this trend we've been in for a while. So yeah, just like a malaise for this fund. Check it out. Yeah, we're tagging our yearly value area. It's on our weekly chart. So yeah, definitely, not looking so hot for the ARK fund. And then what else do we have here? So we have, the ARK fund, very poor performer. Telecommunications down 1.79%. Cannabis, which has been, just a horrible performer. SPACs have been a horrible performer. Yeah, mobile payments, semiconductors. Yeah, so some of these more like growthy areas of the market everyone's been allocated to. Home builders as well, going down 1.2%. Let's take a look at the home builders. Yeah, home builders also, have been in a downtrend, got a bounce, and then a pretty big red candle today. Also, let's take a quick look at Treasuries, because the jobs report, always impacts the Treasury market pretty significantly. Yeah, and look at this team. So our 10-year Treasury note, 10-year Treasury futures, they just made a new swing low. And back in February, when we had this initial growth scare and all these growth stocks really sold off, we hit this low. I marked it off with this red line. So we're actually approaching the red line again. Do I think we're going to hit that red line? Probably. That would make perfect sense. And, maybe even later in the year, we actually go lower. So that's why I've been staying away from these growth stocks, because I think some of these, they're just ripe to get sparked as the market, as yields move higher. But what's interesting is the jobs report that came out, was supposedly a bit weak. It came in lighter than expected, which I would think, a natural response might be, okay, Treasuries get bid because everyone thinks growth is going to be slower, but we actually got the sell-off in Treasuries. So just very odd action. Same thing, speaking of odd action, the VIX market was down today, and the VIX was also down, and we're trading towards the low end of this recent range. Let's take a look at our actual S&P 500. And we closed below a key level today. I did not like the close on the market. So look at the last rally attempt that we had. So we had, this rally attempt really in the beginning of this downtrend. This one, barely even a rally attempt. We just tagged the 20-day moving average from below. This one over here in late September, this was like a more legitimate bounce in the market. And you can see we tagged the 20-day, we briefly traded above it, and then we just shooting star candle, fell right below it. And then the next day was a bloodbath. Now on this bounce, it looks very similar in terms of the shape here. We tried to trade above the 20-day, and you can see we actually made a lot of progress in here. And then, selling yesterday, we closed pretty much right on the 20-day moving average yesterday. And now today, after that jobs report, we traded all around this thing. We traded in a really tight range today. That's the thing. It's not like it was a really volatile day. And maybe that's why the VIX is coming in, because the market's really just not moving all that much. If you check out over the past, 2 weeks, has the market really gone anywhere? No, it's just been, bounce, decline, bounce. So yeah, but the key distinction here is we were not able to close above the 20-day simple moving average. And that's definitely, there's definitely a game of chicken being played today where, a lot of these algos, it's like, are we going to put this thing over the 20-day? Because, over the 20-day, there's going to be a lot of trend following strategies that start allocating into the market. And then below it, there's likely a lot of strategies that will go, okay, this was a failed, bounce attempt, or a failed attempt to reverse the trend. So on Monday, you see these two red lines I drew in here. This is the range we were stuck in for 1, 2, 3, 4, 5 days in a row. Could we retest the top of that? Absolutely. What I really would not want to see is us re-enter that range. Because that really just means, hey, we're still in the heart of this downtrend. Nothing has changed. So we'll have to see how this trades next week. But yeah, I did not like the close here. And then we'll check out the Nasdaq. Nasdaq was down 0.51%. Nasdaq made an attempt at this 20-day, basically like a feeble attempt. This one I really didn't have any expectations for. I think the Nasdaq is going to remain pretty weak. Yeah, Nasdaq made an attempt at the 20-day, closed above the 5-day EMA though. So I'll have to see. It's not like all is lost. Same thing with the S&P 500, closed above that 5-day EMA. And then the Russell. Once we got that super weak jobs report, I was like, geez, this could be a bad scenario for the small caps. And sure enough, after being the best performer yesterday and looking like they could, really go off to the races, now today we had an inside day. This is another nuance here where, we've been talking about this a lot, but some of this price action, it feels like it's horrible. Oh my gosh, the market was down. But even for the Russell, we were down 0.73%, but this was just an inside day. We still closed above these key moving averages. We closed what looks like slightly below the monthly point of control. This is not, ideal scenario for the small caps, but at the same time, just an inside day. And I have this blue line going across, marking the range, that we were stuck in for this, 5 or 6 day stretch over here. We are still stuck inside of this range. Then also we have this downward trend line from basically the past 3 bounces. A downward trend line just keeps moving lower and lower. So it looks like it's a high probability that these small caps, break out. It might just be a little bit later than what I expected. So we'll have to see what happens with these small caps next week. Also, very low volume today as well. Yeah, that was definitely not, in terms of the worst case scenario for that jobs report, we basically got, the worst case scenario. So definitely could have been, a lot worse in terms of the price action. Then the Dow Jones, this is the lone soldier over here, only down 0.05%. This one is basically just a consolidation day after a big run the prior day. This one's still above the monthly point of control. Really no technical damage here. So what it's looking like to me is we're basically getting a reopening trade. We're moving past COVID. We saw with the sectors that are moving up, really what's been strong. And yeah, take a look at the style factors as well. So style factors that we're seeing here, check these out. We have our best performers on the day. Value stocks only down 0.03%. We had high beta only down 0.08%. So that is telling me, hey, pretty much this entire reopening trade sequence, it's oh yeah, we're getting, rotation into the cyclicals, but the overall market has just been so weak that it's just a really feeble rotation. So yeah, high beta strong, value strong, cyclicals only down 0.25%, quality as well, hanging in there. Really the biggest losers for today, growth and Minvol. It's kind of interesting. Yeah, and some of these names, these growth names really got hit. So even for me, since I'm exposed to the small caps, you can break out the small caps into small cap growth and small cap value. Small cap value, barely flinching today, still above this monthly value area high. But it was the small cap growth that really weighed things down. Boom, look at that. Below the monthly value area low. This is a clear rotation out of growth into value. So yeah, and a lot of these, really beloved names like, let's see, Datadog, moving a bit lower today. Asana, some might appear on my weekend watch list on the short side, projecting at the 20-day. There are some stocks that are showing nice relative strength, like Digital Turbine. Now this is one that I have a position on currently. Really nice relative strength, trading up to this Venom 1 pivot. And yeah, we're starting to approach the highs here. It's looking really good. This firm currently have exposure to this one in the long-term account. up 5.44%. So there's like rare gems in there, but a lot of these other growth names, like for instance, like MDB, this one had a nice power earnings gap set up, just giving up the ghost completely. Palantir as well. Yeah, just giving up the ghost. This one was horrible. It was such a tease. And that once again, everyone got excited for the breakout. Even I bought this one for the breakout. I ended up just scratching my trade. Yeah, this was like 10 videos ago. But yeah, I just scratched it. I think I made like 2 cents on my Palantir trade. This thing just went. So there's like this group of just like Palantir bulls that like love this stock. They just think it's going higher. It's just done nothing for, a year now. But that's the case for a lot of areas of the market. So, definitely been a bit more challenging. So let's take a look at some of my trades for today. And, we won't be able to go through all of these, but basically my mentality was today was, hey, we got our rally. Let's see if the rally sticks. And when we got that poor jobs report, I was like, this was not really a good scenario. So I'm pretty open to downside and really just taking things off that aren't working. So I closed out some IWM calls in the morning for a small winner, 592. I had paid 567. Small trade. I have this one as a 1 star right here. I also closed out, I had some IWM, basically like lotto calls that I did close out for a loser over here. Close these out for 13 cents. I had paid 171. I just took a shot at it. So this one was like a shot in case the small caps really just sprinted to the upside. That one did not work out. And then basically when I closed out some of these trades, I ended up allocating to K-Web in the morning. So I put this one on a 936. I got long some May 20th, 2022 calls. This is going out, 7 months in time or 8 months for Chinese equities. Picked up the 50 strikes, so pretty conservative. And yeah, with this K-Web, I just think everyone has gotten smoked in Chinese names. And now they're doing something a little bit different where now they're decisively trading above the 50-day moving average. Like Chinese stocks, they looked great. Look at this daily closing range, not bad at all, right? So it's just kind of funny. Like K-Web, this is almost like the Nasdaq for us. The Chinese, they started removing their accommodation way earlier than us. The United States was so sloppy with it. The United States wanted to keep it going forever because they thought MMT would work. And now that they got this inflation, now they're like, oh God, now we have to remove the accommodation. Whereas the Chinese, they took their medicine way early. So they have been in this downtrend, for so long. And now as our markets are softening more, now Chinese stocks, investors, especially if they don't think we're going to decouple from China, it's like, all right, well, we have like these US stocks like on the moon. And we have like Chinese stocks just crashed. Like, where am I going here? So yeah, 2 high volume days back to back, looking good. So yeah, I put some exposure on for May. And then LVS entered this one just for a little lotto trade. I got some October 15, 39 strike calls, and I closed those out a little bit later in the day for 59 cents. So took it from 51 to 59, not too shabby, just for a little like day trade. Yeah, so closed out for 59 cents. I closed out the remaining 2/3 of my SPY October 15th 434 calls for 612. And this was towards the close when I saw that the market was going to close below that 20-day. I was like, do I really want to have these short-term SPY calls on? No. So close these out for a nice winner, maybe like a 25% gain on those. And then what else happened here? Pinduoduo closed this one out for about like a 50% winner as well. These were short-term calls I added, I believe, yesterday or 2 days ago. I just figured, hey, I added the K-Web, so I have that Chinese exposure. Let me just hit out of these short-term calls, because this is where you can get messed up. If you have like too many short-term calls on, and then the market just does something you don't expect, like, just like, you know what, these, I still have the exposure, but this is out to May. So I just feel a lot better with that. So took that one off for a nice winner. And then I tried some Roblox at about 2:30. I got long some Roblox calls because this one is getting beaten up. This is one of my favorite long-term names. So I'm pretty much stalking this. We're basically breaking back into the initial IPO range that this stock was in when it first went public. So I actually love that. I'm like, what? I can get a better price than, I've ever been able to. So I was trying to take advantage of it. I bought some November calls and I went super conservative. I bought the 65 strikes, like deep in the money. But then when the market was going to close weak, I was like, can I really justify adding new risk on here? I was like, no, I can't. So I put these on for 875. I closed them out for 860 into the close. So yeah, basically like scratched them, lost 15 cents. I just did not want to take incremental risk into a weak close. So maybe like if we flush out on Monday or something, or get some weakness, or if this thing turns around, maybe it'll be a better candidate. But I was like, you know what? I can't really justify it. Now let's take a quick look at our big tech options races. Dun, dun, dun. Yeah, this weekend again is going to be really interesting. Just in terms of my weekend analysis, I'm actually like really pumped to do it. Just because we're seeing the strangest market dynamics, team. Like, the VIX is down, but the markets are down. Everyone's loading up on puts. Take a look at this. These intraday put to call ratios above a 1 again throughout the entire morning and the afternoon. So yeah, what I find interesting here is the put to call is really high, but the vol was low for all these indices. Definitely some major nuances going on there. Now let's take a look at our VIG Tech. We'll see our VIG Tech options races. Let me pull this up. And that'll give us a better feel for where everyone's allocating their capital in this market. So look at our options race. Today's combined flows. Dun dun dun. Okay, so we got some affirmed flow. That stock, is obviously very strong right now. We have our usual SPY, usual Tesla. Alibaba has been on this list for the past few days, team. And what's interesting is there's just as many puts being bought as calls, but the stock is behaving very well over the past couple days. So let's look at our Tradescape. And let's look at Baba. Ooh, today more calls flowing in, team. So I like this because it's not like everyone's just buying calls. Like everyone's been loading up on puts on Alibaba for a long time. Alibaba puts have been working, for the past month, just like clockwork. Yeah, Alibaba, it's doing something different. It got the close above the 20-day. It's done that a few times before, but look at this. We really couldn't even manage the close above the 20-day. Here we did get it, and then we just moved sideways before rolling over. This was, we got a decisive close above it, and then a follow-through day above it. So, yeah, it definitely looks like you'd be doing something a little bit different. Maybe make it up to this 50-day moving average at the very least. So yeah, that one's looking very solid. And then what else do we have? Let's take a look. GM. Ooh, everyone's loading the boat on GM calls. Dun dun dun. Wow. Nice close for GM. That's really good. So GM, I did not notice this one throughout the day. I think I did look at Ford. Yeah, and Ford not nearly as good of a closing range. This looks like if we do get that cyclical rally, like a legitimate, rotation, this one looks like it will probably just jump out to new highs pretty quick. Yeah, nice weekly candle. Look at that. That was really nice. So we have GM, Tesla. I noticed a lot of call buying, especially early on in the day, and Tesla's putting in a really nice pattern. So it's weird. It's like the market is just very finicky on a day-by-day basis. Like, one day it'll be like, yes, we broke the downtrend, then the next day it's like, oh, we're back into it. So it's just like a really choppy market. Yeah, Tesla's just moving around in this really tight pattern. So yeah, it looks pretty solid, and we're seeing that call flow. We'll just go through one more before we wrap up. What do we have here? Let's take a look at Google. Let's take a look at Netflix. Yeah, Netflix continued call buying, team. So Netflix, I'm long this one in the long-term portfolio as well, and I traded this one as well with some calls. And this one had its breakout, and now it's been consolidating for a few days. Had a green close even though the market was red. So if the market firms up a little bit and these key moving averages can catch up to price, Netflix still looks like a pretty good long candidate. That being said, team, that about does it for this late night edition of our market recap. Hope you all had a good trading day, and yeah, enjoy your weekend, especially if this was, a long trading week, which I think it was for most investors and traders. Definitely just make sure to get some time off the screens, relax, recharge, and I will see you all next week.